Imagine paying the price of a luxury mansion for a single flower bulb, or watching your life savings vanish overnight because everyone suddenly realized those digital apes weren't worth millions after all. Sound familiar? In 1637, the Dutch went mad over tulips, creating history's first speculative bubble. Fast forward to today, September 2025, and crypto markets are buzzing again, with Bitcoin ETFs pulling in billions and new coins like Solana promising moonshots. But is this another tulip in disguise? Welcome to Market Evolution Chronicles. Today, we dissect the rise and fall of Tulip Mania and draw chilling parallels to crypto bubbles. Stick around. You might just save your portfolio. Let's travel back to the Dutch Golden Age in the 1630s. The Netherlands was a trading powerhouse, flush with wealth from global commerce. Tulips, exotic imports from the Ottoman Empire, became the ultimate status symbol. But not just any tulips. These were rare varieties with stunning virus-induced patterns like flames or stripes. They weren't grown for gardens. They were traded like stocks. What started as a hobby for the elite quickly turned into a frenzy. By 1633, speculators began buying and selling tulip contracts, essentially futures promising delivery of bulbs months later. No actual flowers changed hands. It was all paper promises. This was the birth of modern futures trading, but without regulations, it spiraled out of control. Prices for common bulbs stayed reasonable, but rare ones? They skyrocketed. The mania truly ignited in late 1636. A single Semper Augustus bulb, famous for its red and white streaks, sold for 6,000 guilders, equivalent to a skilled craftsman's annual wage times 10, or about $500,000 in today's money. Why? FOMO. Fear of missing out. New money from merchants and even farmers poured in, borrowing against homes to buy in. Timeline. By December 1636, prices doubled weekly. Taverns became makeshift exchanges where anyone could trade. One story claims a sailor mistook a rare bulb for an onion and ate it, costing his boss a fortune. Causes? Economic boom created excess capital. Tulips scarcity. They took years to grow, fueled hype. And the introduction of wind handle, trading without owning the asset, mirrored today's leverage. At its peak in January 1637, some bulbs fetched prices equal to a canal house in Amsterdam. It seemed like endless growth. But bubbles burst. On February 3, 1637, at a routine auction in Haarlem, no one bid on the offered bulbs. Panic set in. Prices plummeted 90% in weeks, from thousands of guilders to mere pennies. Buyers reneged on contracts, sellers sued, but courts largely ignored them, calling it gambling. The aftermath? Minimal widespread ruin. Only speculators lost big, and the Dutch economy recovered quickly. But Tulip Mania became a cautionary tale. Overvaluation driven by speculation, not fundamentals. One recorded bankruptcy was an artist, Jan van Hoyen, who dabbled too deep. Historians debate if it was a true mania, but the lesson sticks. Hype can blind us to reality. Parallels to crypto bubbles. Now fast forward to crypto. Remember 2021? Bitcoin soared from $30,000 to nearly $69,000, driven by institutional hype and retail FOMO. NFTs exploded. OpenSea volumes hit $2.6 billion in December alone, up from $65 million in 2020. A digital JPEG sold for $69 million. Sound like tulip bulbs? Parallels are uncanny. Both involve scarce assets, rare tulips versus limited Bitcoin supply. Futures trading, tulip contracts versus crypto derivatives, and herd mentality amplified by new tech, taverns versus social media. The 2022 crash? Bitcoin tanked to $16,000 amid FTX collapse. NFTs lost 95% value, echoing Tulip's sudden drop. In 2025, we're seeing echoes. Bitcoin ETFs drew $1.9 billion in early January low. What can we learn? Beware of hype without fundamentals. Tulips had beauty, but no income stream. Crypto? Ask, does this coin solve a real problem, or is it just memes? Diversify and avoid leverage. Dutch speculators borrowed heavily. Crypto traders use 100 times margin. Stick to what you can afford to lose. Spot the signs of a bubble. Rapid price spikes. Everyone talking about it. Media frenzy. These screamed tulip peak. In 2025, watch for stablecoin surges or regulatory shifts as signals. Innovation survives crashes. Tulip Mania led to better markets. Crypto crashes birthed regulations and real-world uses like payments. Bubbles aren't all bad. They drive progress. Apply these, and you'll evolve as an investor. Tulip Mania wasn't just a flower flop. It was a mirror to human greed and innovation. As crypto heats up in 2025, remember, bubbles burst, but smart investors adapt. What do you think? Is the next crash coming? Drop a comment below. If you enjoyed this, hit like, subscribe to Market Evolution Chronicles for more financial histories, and ring the bell. Next up, the evolution of value investing. Thanks for watching.